thereabouts, what the risk of this is going to be, what the return is going to be, how they're correlated, and then we build these models that are supposed to predict future outcomes. And that works as long as your assumptions are stable. But what if you have this massive regime shift? What if you have AI? What if you have geopolitics? Things that are thrown into the mix that your models can't capture, right? And that's the systemic risk that you were talking about earlier, Hisham. And so I see the rise of TPA, or total portfolio approach, as a coping mechanism around wider, longer, broader, softer risks that we all need to think about as investment professionals.
Technology is becoming more and more and more important in the economies around the world. It's more of a source of growth in the world. It impacts everything else in the portfolio that we have. If we're investing in infrastructure or real estate, it's impacting everything in our portfolio. We are more blind to it if we're only investing super late, and companies are staying private and scaling into very big companies for much longer. And if you're not in them at an earlier stage, if you're waiting just before the IPO or the IPO, you're going to lose a lot of value creation in the portfolio.